bank, British bank Barclays, beating profit expectations in the fourth quarter, reporting earnings yesterday, also unveiling a plan to return £15 billion, more than $20 billion US dollars, to shareholders through the year 2028. The company aiming for a 14% return on tangible equity or better in the same period through cost cutting, shrinking the share of its investment bank, growing domestic retail banking, and other steadier businesses. The bank expecting revenue to grow more than 5% each year and boosting income guidance to £31 billion in 26. That's roughly $41 billion. Barclays Private Bank and Wealth Management Division represents nearly £53 billion in AUM. That is more than $72 billion in US dollars for assets under management. Gentlemen, now the leader of the big giant company, Barclays CEO C.S. Venkatakrishnan, is with us. Great to see you. Sir, may I call you Venkat? I know many people call you Venkat.
Of course, Maria. So good to be here. And of course, you may call me that.
Thank you, Venkat. Tell us about the quarter. What drove business?
So thank you very much. It was a very good quarter. The bank was firing on all cylinders. So all our divisions did well. But if I have to call two out, one is our U.S. consumer bank. We've got a bank in Delaware that collects deposits, has a huge partnership card portfolio. So if you've got a Gap credit card or JetBlue credit card, Barclays behind it. And we bought a direct-to-consumer loan business called Best Egg. And that business has grown in its return on tangible equity from 4% 2 years ago to over 11% right now. So that's been a tremendous growth as the business has added top-line revenues and really been operationally efficient. And of course, the second part is our investment bank sitting in New York, where both in trading and in banking, we've done well, serving American companies, serving investors across the US and across the world, in both financing them and in trading with them.
Yeah, great performances on both fronts. Venkat, I want to get back to the consumer for a moment, and certainly through the eyes of your U.S. consumer bank. We've been talking all morning this morning about all the money being spent on AI and how in many cases the banks are lending the money to so many companies. Can you give us a sense of the most important trends right now when you're looking at commercial and consumer credit?
Yeah. So we think the consumer is strong. What we have seen is very well-behaved borrowing statistics in our U.S. consumer bank. People are obviously borrowing, but they're also paying back, and our default rates are very low, and impairment rates are low. What part of the reason that's driving this is, of course, the government stimulus. Part of it is mortgage rates have been controlled as interest rates have little come down, and the president's actions with Fannie and Freddie. And then that obviously puts money in people's pockets, and they can both spend. And then the most important thing is, the huge amount of investment that's going on in AI, as you say. And a lot of it, we'll talk about how banks are lending, but a lot of it goes into the real economy. We think AI and AI investment is about 1 full percentage point of US GDP. That's a huge number all over the country. When we look at it, obviously, we're looking at who the borrower is. We're looking at what the purpose of it is. We're looking at what kind of leases they're getting and whether they're from the big, solid, good companies. And that's what makes that lending better.
Yeah, and of course, talking about AI, you have to take a look at the competition coming from fintech. Venkat, we've been having this discussion about, the Clarity Act and the Genius Act and why the Clarity Act is getting held up in the Senate right now, and whether or not crypto platforms should be able to pay customers rewards if they take their money out of traditional banks and put them in crypto platforms. How are you fending off these fintech competitors right now? And what is your take on the future of crypto in that regard?
One of the things, Maria, we've been speaking about today at our earnings and with analysts is how much we're investing in technology. So when we think about fintechs, they've made the user experience really good. They've taken pain points out, and they help people move money, and especially in payments, pay people. And of course, now it's broadening into digital assets, including crypto and stablecoin. Banks have to get the same kind of investments in technology to make it easy for their customers and to make it easy for them to interact with us. Our US consumer bank is almost virtually digital. we don't have a single bank branch. And we serve customers on deposits, on their credit cards, and then soon on direct loans digitally. And when it comes to crypto, stablecoin are all important part of the new digital asset platform. And I think it's important both for banks and for the fintech companies to work together in a proper regulated way to make sure that the consumers get the best out of these assets, but to get it safely.
So do you think people are actually going to move money out of traditional deposit accounts and put them in crypto platforms?
I think it will take time. I think right now traditional deposit platforms have the safety of FDIC insurance, and that's really important to the consumer.
Right. That's a great point, because I keep making the point, look, I don't think you can have a move of money out of traditional deposit accounts and going to crypto platforms without those crypto platforms facing the same regulatory framework that the major banks do, right? I mean, if you're going to act like a bank, then you probably need to face the same banks that the regulations that the banks face. So can you talk a little about the upcoming regulations that you may be concerned with and how that shakes out in terms of crypto? Because you've got regulations from the U.S., EU, and beyond, right?
Yeah, the joy of being a global bank is that you're globally regulated. But I think the important thing about regulations, first to begin, Maria, with what you said about bank accounts and crypto. Look, FDIC protection of bank accounts is about 100 years old. It's from the Great Depression. And it was to help people protect their money against bank failures. And it's a really important plank of consumer protection. The second thing is that if people are going to use alternative places to store their money, they need to understand what safeguards, if any, there are. And I think it's important to have safeguards for consumers. And then when I look at regulation, I think in the US, the new capital rules, the move by the Federal Reserve by Mickey Bowman, and we'll wait to see what Kevin Walsh does when he becomes chair. The rules in the US on the supervision aspect of the Federal Reserve is changing, and it is adapting to the environment in which we are, and I think that's a good thing for banks.
Yeah, and speaking of, I mean, the Bank of England held interest rates steady at 3.75% to start the year. The Fed also holding rates steady after 3 consecutive rate cuts at the end of last year. Preceding the president's nomination of Kevin Walsh. What are you expecting on interest rates, and how prepared are you for a potential downturn?
So look, we as a bank, we model various scenarios, and we try to keep ourselves ready for changes in the economy, for changes in market conditions, for changes in credit. So we prepare. As far as the economy itself goes, both in the UK and the US, I think the regulators and the monetary policy authorities are looking at economic data. I know we are going to get non-farm payrolls, I think, tomorrow in the US, so we'll see a health sense of employment. But, growth in the US is extremely strong. And that's in part because of the various bills, the, one big beautiful bill, the investment companies are making in data centers and the like. So I think growth is strong and growth is being supported.
Well, what about credit cards? Because, of course, one policy that the president has put out there is cutting credit card rates to 10%, at least for a year, down from 28%, 30%. How are you going to deal with that if, in fact, we see credit card rates go down to 10%? What kind of an impact on earnings is that, Venkat?
Well, look, 10% is going to affect the entire industry. But I think the important part of this debate, Maria, is for us to balance the importance of consumer affordability, credit affordability for consumers, which is really important, and credit availability, which is the ability of banks to lend to them. So we think, credit card spending is a third of all US spending. And people sometimes have to borrow on their credit cards to make it over the next month or 2 months. Banks make that available, and that's credit into the economy. That's a good thing. Now, we need to do it in an affordable way, and that's the conversation we as a country need to have.
Well, I mean, look, there's an analyst out there, Mike Mayo, I believe, who says that if the credit card cap goes to 10% on credit card rates, it's going to cut earnings from the major banks between 5 and 18%. Do you have a plan to replace that revenue elsewhere if, in fact, you do see that materialize?
So, look, we are obviously coming up with plans, and we're looking at all different scenarios for what might happen with credit card rates. I think basically any part of a plan will be to run your businesses more efficiently, to look at where you're lending and the appropriate ways in which you can lend. As I said, the trade-off ultimately is between the rate you charge and how much credit you make available.
Yeah, I mean, look, that's the point, right? Because the worry is that banks are going to pull back, and the consumer at the end of the day gets impacted if you can't get the credit that you need. All right, Venkat, let me turn to the investment bank. How are you going to raise market share here? How are you going to take market share from some of the competitors out there when it comes to IPOs and M&A? What is your expectation for 26 and beyond in that business?
Yeah, look, we reported, or we said at the end of last year, that the pipeline was looking strong across M&As and equity capital markets, and it continues. I think the important thing is for us to have good analysts, good bankers, and cover the important companies and the sectors. That's what we try to do, and be part of the growth economy and look at companies that have the need to take action in terms of their own M&A strategies. And you're seeing a lot of it, obviously, in tech-related industries, partly in healthcare, as people adjust to the new economy, and it's even happening in industrials. So we think it's important for us to cover these industries. Now, one of the things Barclays has done a lot for many, many years is to be very sophisticated in the way we work between our trading and banking businesses, and sophisticated in the kind of financing we provide. I expect fixed income still to be really important in the way in which we address the market, providing lending to the big corporations. I call it our calling card, and credit financing will be our calling card.
And we just spoke with one venture capitalist on the show who was saying, yeah, with a market at record highs, you're seeing lots of companies wanting an exit strategy. They want to go public. So what does the pipeline look like for you at Barclays in terms of IPO and capital raises? And what about M&A? What sectors should we expect that could consolidate?
Yeah, Maria, so, the pipeline has been building and been robust through the end of last year and into this year. I think the sectors where you're going to see it in industrials, you're going to see it in healthcare, as companies try to get that next level of the new drugs and the new pipelines. You're going to see it in parts of the tech economy, again, as the big get bigger.
Are you expecting growth from any one specific area in the year ahead, Venkat? Where would you say the growth comes from at Barclays in the coming year?
So within Barclays, we expect our trading businesses to do well. We expect our retail businesses to do well. And of course, the U.S. credit card business, where, we bought a company called Best Egg, which is a direct-to-consumer lender. And, as we continue to refine our digital operations in the U.S., and give a digital proposition, that's where I'm really, really hopeful that we can provide lending and credit to our 20 million plus customers in the U.S.
Venkat will be watching that story, and certainly a growth story. We so appreciate your time this morning.
Thank you so much, Maria, for having me.
Thank you. C.S. Venkatakrishnan joining us this morning from Barclays. We'll be right back.